go, here we go, yeah. At the top of the class on a roll, hey. And it's time to run it up, yeah, you know, yeah. Mask down, put the pedal to the floor, yeah. On a roll, here we go, here we go.
What is going on, everybody? Welcome back to the channel. And in today's video, I want to talk a little bit about Polygon. With face-melting partnerships, a focus on tech, extensive funding, and even whispers of a token redesign. Is now a good time to buy Matic? Today, I've got the sauce on Polygon, so don't miss it. Polygon has humble beginnings. It all started when Jainti Kanani, sorry if I butchered her name, saw a weak link in Ethereum when CryptoKitties NFT project launched. Too much activity, congestion, and the fees were too high. A data scientist with Housing.com, he got in touch with Sandeep Nailwal, a blockchain developer, and Anurag Arjun, sorry about the name if I butchered that again, a business consultant to co-found what we know as Polygon, the layer 2 Ethereum scaling sidechain with some of the best partnerships in the game. Who were they partnered with? DraftKings, Adobe, the NFL, and Liverpool, Starbucks, Adidas, Prada, Disney, Meta, Stripe. It's turning out to be the go-to platform for big companies who want a little piece of NFTs, Web3, and crypto. And they're working with these companies on projects that have the potential to drive adoption from grassroots. More on that later. Polygon's success strategy starts with their tech. So let's start by getting into what makes Polygon so useful. Polygon is a proof-of-stake Ethereum sidechain that's compatible with the Ethereum virtual machine. It's secured by validators that are selected through an auction process. Although the barrier for staking is high, anyone can delegate Matic tokens. Because of this network validation structure, Polygon struggles with centralization and tokenomics that could lead to decreasing incentive for validators to secure the network. If you know someone who doesn't really like Polygon and its Matic token, this is probably why. With the project continuing to expand, co-founder Mahalo Bejilek, again, sorry about that name, teased the token redesign in December of 2021, while I'm going to tell you more about that later on in this video. Right now, Matic tokens pay for transactions, and these transactions are faster than what you can find on Ethereum. Polygon has a throughput of 7,000 transactions per second, compared to Ethereum's 15 transactions per second. The transactions are processed on Polygon's Ethereum sidechain, giving the network all the decentralization and asset security that you'd expect from Ethereum without the network congestion. Tokens can be transferred easily between Polygon and Ethereum, and Matic even benefited from the Ethereum merge with deflationary tokenomics. The secret sauce for Polygon is their L2 zero-knowledge rollups. They modified Ethereum transactions so that several transactions are packaged or rolled up into a single transaction. Developers can use the same code, tooling, and apps that they use on Ethereum, but with Polygon, they get a higher throughput and lower fees. Polygon focuses on developers, rolling out the red carpet for dApp creation and innovation with Polygon Edge and supernets that offer easy on-ramping and premium support. Not to mention $100 million invested in networks that can be run without cost. This is meant to fast-track blockchain adoption and make it easy to build on Polygon. Its development framework makes building dApps on blockchain networks and L2s way easier. And it allows building of private or public Ethereum-compatible blockchain networks and cross-chain communication through a centralized bridge for both ERC20 as well as ERC721 tokens. Polygon Nightfall is the chain's privacy rollup for enterprises, and it offers private NFT transactions, private DAO voting, and supply chain organization with zero-knowledge proofs. They're working on Polygon Zero, a zero-knowledge scaling solution that generates proofs faster than any other tech. At 170 milliseconds on a commodity laptop, they call it security of Ethereum without the wait. It's one of the most heavily funded blockchain projects, raising $450 million earlier this year and another $50 million from investors and VCs. Not to mention partnership announcements that have the potential to drive blockchain adoption. The latest announcement is Solana's top Ethereum wallet Phantom expanding into Polygon, and the Graph indexing service offering support for Polygon. Back in September, Starbucks announced a big move into NFTs, and they're using Polygon to power this industry-disrupting move. Many are speculating that Starbucks NFTs will be a catalyst for adoption because so many people already use their loyalty program. The partnership will allow loyalty rewards members to earn and purchase digital collectibles using blockchain to gamify the already lucrative customer reward sector. I'm sure you remember when Reddit made a giant leap into NFTs with the help of Polygon, with its non-fungible avatars that increased in price by almost 800%. They launched Polygon ID with zero-knowledge technology so that people can show their identity attributes online and interact with smart contracts, dApps, Web3 services, and more without having to give up their personal information. This is going to be a major component of the Polygon DAO that will allow broader governance and more decentralization without the need for personal identifiers. Circle and Tether launched on Polygon over the summer, and even Meta's Instagram is going to use Polygon to support NFTs. Currently, there are over 20,000 dApps on Polygon with ambitions of even more growth. Polygon markets itself as a green blockchain with the goal of becoming carbon negative by the end of this year. Its green manifesto announced in April of 2022 pledged $20 million in carbon offset, including $400,000 in carbon credits, equivalent to 90,000 tons of CO2. They're partnering with the CandleMafia, an on-chain carbon market, and using its offset aggregator decentralized app. With Ethereum's merge to proof of stake, Polygon reduced its carbon footprint by 99.91%. JP Morgan used Polygon a few weeks ago for their first DeFi trade using Aave, depositing yen on one side and taking out Singapore dollars on the other. They use tokenized currencies on Aave with Polygon as the blockchain for speed and lower gas fees. The price of Matic ticked up over the past month and turned on rocket boosters since November 22nd, where it bounced over 10 cents per Matic token and its current trading price of over 90 cents. The price was well above $1 not too long ago, even while prices in crypto were just barely treading water. Everyone is paying so much attention to Polygon right now because they got a lot in the work and potentially even more coming up in the next 1 or 2 years. They're focusing on their tech to make it the best in the business and prioritizing devs so that Polygon is a blockchain they want to build on, which is extremely important. Branching out with their suite of Ethereum scaling solutions means that their token will need to do more than it currently does. When they tweeted about the token redesign last year, they said that they will share and discuss everything with the community once they have something solid. And they also said that the token redesign they're working on will introduce improvements to the tokenomics and enable the token to power this exciting multi-chain vision that Polygon introduced. Polygon has big plans, and revamping their tokenomics could be a very exciting piece of the puzzle that not a lot of people even know about. We might have to wait a while for news on that, but for now, Polygon is expanding so much that they've caught investor attention even in the bear market. That's all I got for this video. I'll see you in the next one. Frankie Candles out.
Here we go, yeah. At the top of the class on a roll, hey. And it's time to run it up, yeah, you know.